Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools Matt Frankel and Toby Bordelon giving a 1 to 10 rating to a top 200 stock in the primary Hidden Gems database. It's Paychex, ticker symbol PAYX. Rate the strength of Paychex business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at a 9. Toby, you're still strong at an 8.
Yeah, Paychex is one of the largest payroll processing companies in the world, right? Though half of that revenue now, more than half, I think, is from stuff that's other than that basic processing, which is nice to see. Payroll happens regularly, right? Every 2 weeks, maybe twice a month for most companies. So that means regular recurring revenue for Paychex. The business is also quite sticky. Think about how painful it is for you or me to switch banks. It's even more of a pain for companies to switch their payroll process, right? That's a big undertaking. There are other companies out there, but Paychex has scale, and they have been able to successfully translate that core business into some other revenue streams.
Yeah, I give it a 9. We're pretty aligned here. It's a very sticky business. It's a market leader. And Toby alluded to the other stuff it does. The more it adds to the platform, like retirement plan administration, invoicing, tax prep services, the stickier it gets and the more painful switching is for its customers. Its recent results have been really strong, 18% revenue growth in the latest quarter. So I gave it a 9. It's a really strong business.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you gave 8s, Toby.
And CEO John Gibson is relatively new. I'd say he'd been CEO for just over 3 years now. He's done a great job, though. Excellent job in the top role. The culture here is solid. Paychex has expanded via acquisition. So far, those have gone well. The integration of a large acquisition, if they do one, or the risk of overpayment is something to watch. But beyond that, I think management has done a solid job here.
Yeah, I gave it an 8 as well. I agree with Toby. He's done a solid job as the leader. The stock has sharply underperformed the market during his tenure. Not necessarily his fault. The business is doing quite well. The market just kind of, all the payroll processes are very out of favor right now. The business is doing well, though.
For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7s, Toby.
Yeah, the revenue growth is nice, as Nat noted, up 18% last quarter there. Bottom line growth lagging a little bit, though. Operating income up just 6%. Net income actually falling last quarter. Paychex will say, hey, look, our adjusted income is much, much better, right? That's true. But when that adjustment is adding back acquisition-related expenses and acquisitions as part of your growth strategy, I'm not sure that an adjustment that ignores those costs is really the best metric to go with. Balance sheet is pretty good, though. Plenty of cash here. Debt's higher than I would like. Also an effect of those acquisitions. Overall, it's good, I'd say, but not great.
Yep, a 7. I'm sorry I'm agreeing so much, but Toby's spot on here. Everything he said is correct. Solid revenue growth. Margins on a GAAP basis, not on that adjusted basis, are definitely trending lower. $4.7 billion in debt on the balance sheet is a little higher than I'd like to see. But if the recent acquisitions turn out to be value-adding, it'll be money well spent. But like Toby said, you can't really ignore it when you're talking about the financials.
Right on. I mean, it's a timing issue, if anything, but yeah, can't fully ignore it. Matt, let's talk valuation. How well will Paychex stock do over the next 5 years, and how safe is it? Keeping in mind a 10 is a sure thing, 1's a lottery ticket.
I set a return range of 5 to 10% over the next 5 years. I gave it an 8 for safety. It's fallen about 30% from its recent highs due to some, I'd call them mediocre earnings reports, nothing bad, solid growth. So we're starting from a pretty attractive valuation of about 19 times free cash flow. The company's price to sales ratio is the lowest it's been since that initial COVID crash in 2020. The stickiness of the business does provide a lot of safety. In terms of the likelihood that you won't lose money over a 5-year hold, I just don't see it being like a multi-bagger over the next 5 years.
Yeah, I went a little bit higher on the growth there. I went 10 to 15%. I think it's probably the low end of that. The growth potential looks significant to me, all things considered. Safety 7. It's fine. I think valuation looks reasonable. But look, a weakening economy could be a short-term problem for you. So I think that's what I went a little bit lower here.
Thanks to both Toby and to Matt. They've given Paychex a solid overall score of 7.5 out of 10. But Matt prefers Paycom as top it, while Toby prefers Intuit. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Pure Storage. Till then, Fool on. think I screwed that up.
We nailed the 5 minutes though.